Welcome back to our July monthly update with Mark Landon McKernan. We're going to be going over some recent commercial real estate news, new listings, and recent trades. Mark's going to lead it off with some information about the market availability.
Yeah, obviously wanted to go over with the industrial availability here in Phoenix. It is elevated, but obviously size does matter, of course. So less than 50,000 square feet, we've got 1% change in availability since 2019, and 50 to 100,000 square feet, we've got a 4.1% increase in availability since 2019 as well. Obviously a good change in the market. And over 100,000 square feet, we've got a 9.3% increase in availability. So obviously a good shift in the market for what we're seeing. What we've been talking to a lot of our clients, a lot of investors looking to place capital here in the market as well. And small bay product is going to be continuing to be resilient. So lease rates should be a little bit more secure for that kind of product. And big box, we might see some shuffling around, maybe some drops in rates as well to be a little bit more competitive.
Yeah, that's really in line with everything we've been seeing as far as the big box being developed and not really seeing any small bay industrial being developed. So if you're an owner of small bay with less than 5 or 10,000 square foot suites, you're going to be safe.
Yeah.
Moving into the Chicago Title Transaction Report, we get this report monthly. It's really interesting to see some of the trends year over year and also month over month from last June 2024 to June 2023. For example, industrial sales are up 107%.
Wow.
And office is up 97% this past June from June 2023. So it goes to show you there's definitely a lot more activity this year than last year. And on the loan side of things, industrial loans year to date are down 4%, and yet industrial sales are up 34% year to date. So it tells me that there's still a lot of cash buyers out there. Definitely not everyone's pursuing a loan. And obviously a lot of deals still aren't penciling.
Yeah.
So
seems like cash is king. So definitely a shift in the market.
Exactly.
Next one we're going to be covering is a big real estate auction win. So Mac Real Estate just won the bid for a 2,300 acre development site in the North Phoenix Valley. So this is actually really close to the TSMC, Taiwan Semiconductor Manufacturing Facility up in North Phoenix, a little bit further north from Deer Valley as well. Obviously, we've seen a big shift and increase in values in that part of the valley too. So this project is going to be a significant move for commercial real estate investors to capitalize on U.S. efforts to regain semiconductor availability here and somewhat onshoring as well. So Mac Real Estate, their affiliate, is going to lead the $7 billion mixed-use development in partnership with McCourt Partners, and that's going to be a huge development as well. So the Arizona State Land Department awarded the project to them with a minimum bid set at $56 million, and however, the winning bid price has not been disclosed yet. So it's going to include about 28 million square feet of space and will support TSMC's $65 billion project as well for their facilities, and will be a good cooperation between public and private sectors. So
yeah, big win for Deer Valley and big win for Phoenix as a whole, because with that follows a lot of suppliers and a lot of those employees. I know there's over 10,000 employees for TSMC. They all need housing as well. So going to be a lot of developments coming up in that area.
Yeah.
Going into stats on building materials and construction costs, this is something that comes up a lot, especially with developers and just looking at the future pipeline of buildings getting delivered. One of the major issues we're seeing right now is construction still really expensive. We often see on brochures below replacement cost, which isn't saying much because replacement cost is very expensive. For example, on concrete products are up 6.2% over the last 12 months, and it's up 37% from pre-COVID, just before 2020. Iron and steel is actually down 5.9% over the past 12 months, but it's up 53% since pre-COVID. Lumber and wood down 2% over the past 12 months, and up 25% since pre-COVID. And one of the interesting things, we're seeing extreme lead times on electrical equipment, mainly transformers. And when we go call utility companies, SRP, APS, they're telling us to expect a minimum lead time of at least 18 to 24 months, which is really slowing things down on construction. And obviously, on a similar note, people are talking a lot about insurance too.
Yep.
Insurance costs have skyrocketed. I was having some trouble finding an exact stat on this, but from what we're hearing from building owners, they're up about 50% year over year.
It's huge, especially for those triple net deals. It just bring everything up.
Exactly.
So costs.
Yeah, it affects tenants who have to pay that in their triple nets. It affects building owners, users.
Yeah.
So it just makes its way through.
Awesome. And then one thing we also did want to look through is the historical transaction volume in election years. Obviously, this November is going to be huge. So the Fed historically continues its dual mandate of price stability and max employment during election years. So they're trying to maintain political independence. And since 1980, the Fed has actually adjusted rates in all but one election year. And that was actually 2012, with a max of rate hikes and cuts in different years as well. So the Fed action actually varies. So they're actively adjusting rates multiple times based on the economic conditions, while in others, it concluded ongoing cycles of rate hikes or cuts as well. So new monetary policies sometimes started during election years with significant rate cuts in response to severe recessions, thinking of 2008 and obviously 2020. So keep that in mind. Investors like the Fed are really trying to stay inactive during election years with current economic data, likely supporting rate cuts and favorable conditions for equity exposure and longer duration of investments too. So that was a article going from, I believe, JP Morgan, and going through those statistics as well.
Yeah. Another big headline that just came up actually is Elon Musk moving his company's HQ to Texas after a new California bill. We'll stay out of the political side of this, but it really follows the trend of what we've been seeing from a lot of the major corporations moving out of California, moving to more favorable business states like Texas. And there's really a lot of reasons why they're doing that. This one actually followed Tesla's move just, a year or two ago to Austin. And some of the reasons are lower taxes, there's fewer regulations, and more affordable housing for employees. I actually saw Chief Executive Magazine reports annually on the best and worst states for business. Interestingly enough, California ranked number 50, so right at the bottom of the list, and the top 5 states in order were Texas, Florida, Tennessee, North Carolina, and our very own Arizona.
Very nice.
So that's pretty much in line with the conversations we're having with investors. They're selling their portfolio in California and moving a lot of their capital here into Arizona and some of those other states.
We're seeing a huge flight of capital, so makes sense.
Exactly.
Going into some recent sales, so we've got a few that we did want to highlight. So first one's actually off McLean Drive in Scottsdale, up by the Scottsdale Air Park. This one was a really high price per square foot industrial flex condo that was about 4,700 square feet, sold for $1.95 million at $407 a square foot. Block construction, built in 1998, and this was 50% warehouse, 50% office. Has one grade level door and 18-foot clear height as well. It's owned I-1 and it's on 0.32 acres as well. Next one's actually in Gilbert, off of Sunway Drive, 210 North Sunway Drive. It's about 18,000 square feet, sold for $240 a square foot for $4.3 million. Really nice building. It was built in 1999, was recently updated too. Has 3 gray level doors, a truck well, 18-foot clear height, and 500 amps of power. It's zoned light industrial and sits on about 1.38 acres. The next one is out in East Mesa, over by Falcon Field, off of Banning. And this was an industrial flex condo, Suite 103, about 3,200 square feet, sold for about $260 a square foot at $850,000. It's reinforced concrete, was recently built in 2013. It's about 80% warehouse, 20% office, has 20-foot clear height, low power at 200 amps, and 1 grade level door. It's owned I-1 as well.
The next trade's at 1345 South 52nd Street in Tempe. This one was a pretty large property for Tempe. 112,000 square feet, sold for $27.5 million or $244 a square foot. Really nice property. It was concrete tilt up, built in '86 and renovated in 2024. Has 31 feet of clear height, 2,000 amps of power, 3 dock high doors, and 9 grade level doors. The next trade's over at 3747 East Grove Street in Phoenix. This one's just south of Sky Harbor. Over 13,000 square feet, sold for $3 million or $228 a square foot. It was block construction, built in 1985 with 70% warehouse and 30% office. Has 14 feet of clear height, sprinklered, and 2 grade level doors. That one actually sold off market. And the final trade's at 2328 West Palm Lane in Phoenix. 8,800 square feet of industrial flex. Sold for $3.5 million or $179 a foot. It's block construction, built in 1962, and has a secured lot. Features 4 grade level doors, 13 feet of clear height, and 1,400 amps of power. And those are zoned heavy industrial for A2 and situated on just under half an acre.
Nice. So that covers it for this monthly update. If you guys have any questions, feel free to reach out. Landon McKernan, Mark Cassell. We'll see you next time.